Gautam Shah is with us. He's founder, Goldilocks Global Research. Gautam, good morning. Great to have you back on the program. Thanks very much. So, looks like we're once again in the range, a little higher, a little lower, but eventually by the end of it, point to point, not very much to show for it. What's the top-down view? And then we'll get into it in terms of sectors, and IT is something we want to talk about. But the top-down Nifty, Bank Nifty view.
Good morning, Prashant. Yes, it's been 5 months that the markets have really gone nowhere. It's been oscillating between greed and fear. Every time we move to levels of 26,000 and beyond, there is a feeling that we will do well and we will break out and we move in sync with the rest of the world, but it just doesn't happen. And every time there has been a dip, including the budget day, I think the markets have found support at lower levels. So I think it's just been oscillating in a very large range, and in the global context, this is really underperformance, because while in absolute terms, the markets would not have seen much weakness, but in relative terms, India continues to underperform the rest of the world, whether it's Asia, whether it's US or large parts of Europe. There is still nothing very exciting on the charts, because the problem is there is no leadership. The technology index is in a big mess. Reliance refuses to contribute, and there is too much responsibility on the banking sector. And many of the other sectors like capital goods or auto or pharma, haven't gone anywhere in the recent past. So in this environment, and with the Trump card already being used by the bulls, some time back, it's very difficult to believe that the Nifty can break out immediately. So I think we will meander in a range for some more time. 25, 450, I think, is the immediate support. If you break that on a closing basis, there could be more near-term weakness, possibly towards the budget day low. And only if we get past levels of 26,000 are we going to see strength. So in a nutshell, I think it's going to still be a range-bound market with a very volatile and possibly a bearish bias. However, this is still a very theme-specific and stock-specific market. And I do believe for the rest of the year, the broader markets will do much better than the large caps and the top 100.
Good. Gautam, you've at Goldilocks Research, you've consistently maintained a bearish view on the IT sector. And you've tweeted that stance is now validated. But after this kind of a fall, technically, where is the Nifty IT index or individual stocks headed? What is the call now?
Yes, Seema, I think 6 or 8 months back, we saw the first glimpses on the charts where we believed that AI is here to disrupt a lot of what is happening in the country with companies, and that seems to have been validated by the markets with the kind of fall the IT index has seen. It amazes me that an index which was at 40,000 comes down to 30,000 in a matter of 8 days. So there is just no time to react. There is no time to think. Markets do what they have to, and they're doing it very quickly. I do believe that the IT space is in a multi-quarter kind of an underperformance, and this is going to continue. We are still not recommending any sort of bottom fishing. 31,000 is an important support for that index, because it's been the low for the last couple of years. And if that were to break, I think you're going to see much more downside. So I still don't see any positives for that index. For that matter, if you look at global tech, it continues to do quite well, whether it's some of the tech stocks in China, in US, and for that matter, even in Europe. But Indian tech, for some reason, hasn't fared. And I think this underperformance is going to continue.
All right. Hi, Gautam. Good to see you again. You believe the underperformance could continue on that one. What about gold? Has it paused for breath? Or do you think, it's looking a little bit weakish? It could pull back a little bit more?
I think it's paused. I think it did what it had to. We witnessed a beautiful blowout rally at the highs, and thereafter we saw a very large correction for silver. Gold saw a more normal correction. I think the bullish momentum has been broken. It was a very, very overdone. Retail had got into it, not just local but global retail, and I think it was being extrapolated as the next big thing. And when you come to that stage, you just know that all the positives are in the price. So I think gold and silver will get into a volatile phase of consolidation. They will not go up much. I think levels of 46, 4700 will now act as a base, and levels of 51, 5200 will act as a ceiling. And silver also, I think it's just going to stay in that band of 65 to 95. So I don't see any big opportunity for gold and silver, but there is a huge opportunity in global equities as a basket, because there you are seeing massive trends in the last 6 months.
Yeah, no, I mean, the biggest gainer right now, just to go back and turn our attention to what's happening, apart from what we mentioned, is Cochin Shipyard. Cochin Shipyard is up 6% on very outsized volumes right now. So number one volume-led gainer on the NSE, that's Cochin. There is K Fintech, which is having another good day. K Fintech went up sharply. So from 950 to 1,050 between yesterday and today. Texmaco Rail is another one, right? I mean, I think 8.5% is coming up with large volumes for this point in the day. Yeah, Praj Industries is another one, about 7.5% gains. Go Digit Insurance is up about 4%. You got Shakti Pumps, which has been absolutely pummeled. It's at about 576. It's up about 2% with volumes, but that's it. I mean, go down the list, volumes start to thin out very quickly. If I look at the gainers kind of screen, Vedanta is down 2%, and Vedanta with that 2% cut is also the number one volume-led loser on the index. Eternal is down about 2.25%. There is Hindalco, Hindustan Copper. Ola is down another 3% right now at about 27, 28 odd rupees. So just sort of, with 5 minutes into market opening, taking a look at where there is where this is showing. Gautam, the other, I mean, at least in terms of news flow, etc., right, which I think many have pointed out, a secular kind of theme, etc., is defense. I mean, you can make all kinds of fundamental arguments for it. But stocks got re-rated in a big way because of all the ordering over the last 3 years. Now, I think next 2-3 years, it's all about execution because the orders are in. And stocks have reflected that. Well, how do you think about playing this one? Or you think they're also the big opportunities, maybe some of the global players? And just talk to us about that, Gautam.
Well, Prashant, I think markets discount orders and not execution. I think markets are way ahead and these days too smart, and probably most of the positive and the news flow around the orders are already priced in. Many of these stocks are trading at very, very expensive valuations. So honestly, I don't see an opportunity in defense or railway, and I've maintained that stance for almost 6 months. Barring a couple of stocks that have done well, like a BEL, I really don't see many other opportunities. But the real opportunity in my book is the entire PSU space. And I think I've highlighted this couple of times in our earlier interaction as well. The market loves value. The market is looking at value. And you've seen what stocks like SBI and some of the other PSU names have done well. So whether it's oil PSU, metals PSU, coal PSU, infra PSUs, I think this entire basket looks very interesting for me. And I think while the Nifty goes through this very challenging phase of underperformance, I think money is going to be made in PSU, and smart money and domestic liquidity that seems to be coming in on a daily basis is going to hide in that pocket. It's probably one of the safer pockets in the market. So in my book, it's just financials, PSU and metals. I think these are the 3 themes that we like, and we feel that one should only commit on the long side in these 3 sectors.
PSUs, metals, and which one, Gautam?
Financials, metals, and PSU.
Financials, metals, and PSUs. PSUs and metals, of course. I mean, PSUs especially big outperformance last year, and I think this is PSU financials, ex financials, everything, right? The CPSE's basket.
Absolutely. I think the entire space, I see a very large move. I wouldn't be surprised if the PSU index appreciates by about 25% from here in an environment where Nifty is going to find to even deliver 5 to 7%. So I think that's huge underperformance if you can align yourself and if our view turns out to be true.
And the best way to capture that is what? CPSE ETF or something? Or, some stocks out of that basket? And anything you like, you want to point out? Gautam.
Well, passively, I think CPSE ETF or similar ETFs are obviously the best opportunity because I am told that the PSU index has about 20 stocks. It's not a very large set of stocks that you're really betting on. And if you can just focus on those 20, and if you can get a quality outperformance out of, say, 7 or 8 out of them, and many of these stocks are at a dividend yield of 6, 7, 8%, and now capital appreciation seems to be kicking in. And we've seen a lot of initiatives by the government from the PSU space, and the charts are beautifully aligned. And you're also seeing a lot of relative strength, versus all other sectors in the market. So it looks like a happy place to be in.
All right, Gautam, let's talk about a couple of stocks. Then SBI. If I remember correctly, we had a chat earlier, and you said that this is one of your top bets. You can correct me on that one, actually. But if ballpark the stock was around 1,000, 1,020 or thereabouts, it's given a quick fire of 15%. Good for more, or has it run its course?
I made this comment, I think it was on your channel sometime back, that I prefer a 10, 11 PE banking company than a 60 PE paint company. And I think that's really been validated by the market in the last 6 months. And honestly, you didn't need to be really smart or use rocket science tools to understand this beautiful trend that has played out. SBI has been a favorite, no recommendation. And I think we continue to like it as a story because I think it is still very, very cheap on an overall basis. I speak as a fundamental analyst and also as a technical analyst because both of it is aligned quite well. If you look at the PSU index, the PSU banking index, if I'm not wrong, a few days back, it was at lifetime highs. And I think there is clearly more to come. So be where there is relative strength. You don't need to buy something cheap because cheap is getting cheaper and cheaper and cheaper in today's market. And that's a dangerous place to be in.
Any view on the big boys? HDFC Bank showing signs of coming back to life, gone through a bit of a time-wise correction. The other boy is Reliance Industries. I'm just asking you because these are like indices by themselves, with 8 to 10% weightage on the index. So view on particularly HDFC Bank as well as Reliance Industries.
Unfortunately, there's nothing positive coming out of both the charts. They have been consolidating and they've been trying to come out of a range for almost 5 months now. And I guess the FI selling that has been happening, consistently will obviously, attract money into some of these stocks in the top 10 or 15 stocks. So in that sense, I think the Nifty it's difficult for the Nifty to really break out on the upside. And because of domestic liquidity and the global market strength, the markets might find it difficult to break down as well. So I think the best thing that can happen for Indian markets is they stay in a range. It become a stock pickers market, be in the right pockets, and that's where value will be created.
Okay, got it. Thanks a lot, Gautam, for joining in. So the broad point is the headline index stays in a bit of a range. The broader markets could outperform. There'll be opportunities coming in, particularly from PSUs as well as the metal index. And in fact, select stocks look good. And SBI was a stock I think we spoke about last time around. That's had a beautiful, beautiful move, that we've seen. So, that's about Gautam's view.